Well, the British pound is pulling back this morning, and that's after UK Prime Minister Boris Johnson said that Britons should be prepared for the idea of a no trade deal Brexit. This is not the first time that this has come up, of course, but it seems like it's actually maybe possibly getting closer to its conclusion. Seema Shah is still with us, Chief Strategist at Principal Global Investors. How are you thinking about Brexit at this point? I mean, I'm sure you have Brexit fatigue. I'm sure everyone in the UK has Brexit fatigue and wants the thing to be done already. But do you think it'll be a no trade deal Brexit? And what does that look like? Is that already priced in?
Yeah, you're right. Look, it's been a very long 4 years of negotiations here. Um, I think along the way, the market has always assumed that there will be some kind of deal. It's certainly in the UK's interest to have a deal. So I think the market is still hoping to some extent that this is just a negotiating strategy of putting a pretty hard line to convince the EU that actually the UK can go out on its own so that they're not willing to concede. It is not priced into the market by any means, with sterling still above 130, is telling us that the market is still hoping that there is a chance for a deal. If we do get to a no-deal Brexit, then we would be expecting sterling to dip pretty steeply back into the mid 120s, even low 120s. But from a global market perspective, it's actually pretty different because the last 4 years have really given markets, investors a chance to digest what Brexit means, what will happen. So actually now, whereas I think the UK will of course be impacted, Europe to some extent, from a global market perspective, it's not a very significant episode going forward.
Seema, how would a no deal Brexit change your outlook for European equities next year?
So we have become a little bit more optimistic about European equities, mainly because it's got such a significant value contingent to it, which means that if you do get that rotation, European equities should perform pretty well. A no-deal Brexit will have some economic repercussions for Europe. That goes without saying. I think the bigger impact is on for the UK, though. It changes, or almost it keeps a pretty negative view of UK equities still going. We have to see what the fallout would be, but I would assume that the ECB would continue to step up policy. We've already seen some good news from the fiscal side yesterday with the fiscal stimulus recovery package looking like it's going to be approved. So there is stuff still going for Europe. It's not all about Brexit.
So when it comes to Brexit, what is your base case here?
I think the base case here still is that there will be something at the last hour. But I admit, just as you did at the beginning when you were speaking, the chances of that are narrowing. And I think the market is now reacting to that, which is why you've seen sterling fall from a kind of a 133 to a low 131 at this stage.
Seema, I'll let you off the hook, give you a Brexit break for a moment. I want to ask you about emerging markets as well. I feel like they've been getting less attention from investors, or at least they haven't been as much as part of the conversation of investors who we've been speaking to. How do you think their trajectory will be compared to the developing economies as we start to see vaccine distribution?
Yeah, we are very positive on emerging markets for 2021. Of course, not all emerging markets are the same. And to us, Asia is a dominant one. It's got a lot of structural factors going for them, as it has been the case for a number of years. But I think what makes 2021 special for emerging markets is that the cyclical story is also coming into way. There's a lot of difference even within Asia of some countries who really dealt well with the pandemic. So it's not that they stand to gain too much from a vaccine distribution, but they already have a very strong economy. They haven't had too much economic scarring. So therefore, there isn't too much standing in their way of a pretty good recovery in 2021. The dollar, we're expecting a weaker dollar for 2021, a very good thing for Asian currencies for emerging markets. And other countries who have really struggled on the weight of the pandemic, so I'm thinking Brazil, India, their valuations have been ravaged by this. But then from a relative value basis, they do look pretty attractive. So I think, there's so much to say, but in a nutshell, we are absolutely pretty positive on EM for 2021.
Yeah, that was a good survey. And the more these economies have been beat down, the bigger the potential rebound, I suppose. Seema Shah, Chief Strategist at Principal Global Investors. Seema, it's always great to talk to you. Thank you so much. Appreciate it.